Hello everybody, hope that you are doing very well and welcome back to another cryptocurrency technical analysis wherein, what am I on about? that right there was just me speaking in like robot mode. This is actually a contenders live stream, not a cryptocurrency technical analysis. But there we go. Robot Daniel needs to come into human Daniel. Contenders live stream tonight. Wow. Where we are going to be, that's kind of funny. Where we are going to be starting with Tezos chart of the week. Tesla's chart of the week, and then moving on to the visible range. Okay, so the visible range is obviously our trading view indicator. If I have time, I might go over how I like to use this on Sierra charts or Exo charts at the end, and then also like viewing visible ranges somewhat with the market profile and like how you can use this to trade ranges. Okay, and it's really important to acknowledge that the majority of the time you are going sideways in trading, so it's really important to know how to trade ranges, because you are range bound most of the time in trading. Okay, yeah, there we go. Yeah, that was yeah, that probably is all these late nights, literally, because the daily closes is at 1 a.m. Yeah, I stay up on average now until like 2 a.m. to like 2:30, and it's kind of yeah, it has destroyed my sleeping pattern, but nevertheless that was pretty funny. So yeah, before we begin, this is obviously the disclaimer. Pause the screen, read through this, and just know everything I'm going over tonight is educational, not financial advice at all. So Tesla's chart of the week. This one has obviously been on our radar now for I think about 3 weeks since I last mentioned Tezos, being that it was coming down to our like really important support levels. And well, I'll load up the chart in a minute, but obviously it was coming down and it was hovering around this 618 for so. This is the 4-hour chart, by the way, but you can see how it was on the 618, 618, 618, 618, and we were waiting for this to come down really to like take the lows and sweep, well, basically sweep the lows, and that's when we were going to get interested after it swept the lows and got its like bullish market structure. And I was on about this one like 3 weeks ago. And obviously what happened here, we broke out. So this was already a 16% move, but then this is a new, like I'm viewing this as a new trade to go over here. But nevertheless, you know, it's an aggressive compound off of the aggressive entry, which is the 382 support level. And why here? Because you also had EMA support, you also had the environment, okay, where altcoins should do well, in the fact that Bitcoin is ranging. We all know Bitcoin likes to do well when it's, you know, altcoins do well when Bitcoin is ranging, and also the fact that Ethereum is really strong. And this is like bigger than Bitcoin ranging. Like if Ethereum is strong, altcoins in general are going to do well. If you see Ethereum strong and you see Litecoin strong, generally speaking, it would be really strange to see Ethereum and Litecoin doing really well and altcoins like going down. Okay, they generally are going to follow Ethereum and Litecoin. So Ethereum has been clearly strong over the last, you know, week now, where it's up about. It's up about 20%. So, you know, obviously it's going really well. And so with that going really well, the altcoins are going really well. So, well, particularly Tezos, it's number one actually today. So, nice indeed. So yeah, this is more of a short-term trade. I'm not expecting it to take too long once it gets going here, up to the target where I'm looking at. Okay, stop loss is below the 4-hour order block and you know, this resistance support level, and targeting the front run of the monthly. Okay, so this is what it looks like, and I will load up this chart a second and explain this. Sorry if you can hear the dogs outside. But nevertheless, let's go. So yeah, this was obviously one that we're waiting for. I'm a little, you know, I was a little bit at the time, you know, this is where we were waiting for it. So all the way back here when it would have been back on the 12th of March. So we're talking about nearly a month actually waiting for this. Obviously it come down, it hit that 618 and it had the massive increase in price. So it obviously had that 33% increase in price off of the 618. Obviously you come down through this sort of consolidation area, you took the lows of the consolidation and onto the 618, yeah, 33%, but then it obviously came back down for the double bottom. Okay, so you got the double bottom off of the 618. And as you all know, I don't like to trade double bottoms bullishly, because I always believe they are going to fake out before a big move. And, you know, so I was really patient on this one after it formed this double bottom. Basically, pretty simply, just waiting for the lows to be taken. And where was the perfect like opportunity for this to come to take these lows onto the one-to-one extension? As you might be able to remember this setup because I did cover it a few weeks ago. But nevertheless, our one-to-one here was obviously from the high to the low here, back up to the high here, and we had our one-to-one extension. Okay, so as you know, the one-to-one extension inside of the CC is a really nice setup indeed. Offers, yeah, generally speaking, it offers really good opportunities for longs, or obviously if you want a short and a one-to-one a short, but nevertheless, yeah, if you have a one-to-one extension with none CC, then yeah, it's a brilliant setup. Yeah, really nice indeed. So yeah, as we can see, we did sweep those lows. And I know people in the group were, aware of this and ready for Tezos to take off after sweeping those lows. So that was really nice. And obviously, after taking that, we got our Ethereum move up. So Ethereum moved up. What was this now? As well, look where Ethereum moved up, by the way. So that was obviously a really similar setup. Obviously, just coming down, sweeping the lows of the 6.6, and then getting that like 20% move. But obviously, Ethereum did move up first. And then Tezos was sure after, following it pretty shortly afterwards, basically. So we saw this, the strength here. So why was I aggressive in this one? Because Bitcoin is, I'm expecting, I'll go over this in a minute, I'm kind of expecting. But nevertheless, Bitcoin was like range bound, okay, showing a bit of strength. But ultimately, we can like say this is like a range bound sort of thing still. Okay, from the highs to the lows, more or less. So Bitcoin is showing strength / moving up slowly, as well as mainly Ethereum really strong. Is just a good environment for the alts to move well. As you can see, funnily enough today, apart from Link, which has also just started to move up again, by the way. So obviously Link is really strong. I guess the best three alts I would say are Link is really strong recently. WRX is really strong. Tezos is really strong. Basic attention token down today, but it has been really strong. EOS has been really strong as well. So there's the alts are just in general have been strong. Obviously, Litecoin as well. But nevertheless, I'm going over Tezos here. So that was a reason of why I was entering more aggressively on this. Okay. On the 382 as well, you did also have this more local support resistance flip. So if I just highlight this, see this first area of resistance. Okay, then you come and back test it. And you obviously find support on there to move up again. On top of that, you also can see here the area of liquidity below these lows. And you see this, you've got to take those lows and you carry on up. So, it was all like leaning like really nicely. If I'm honest, there was no reason to expect a larger pullback on this. The signs were there that it wasn't going to get a larger pullback, I suppose. So it's like the time and place, knowing when to be aggressive, knowing how to enter, and it was obviously like I'm still in this one, and it's obviously going pretty nicely. We can see at the moment this is up about 4% from entry, so I'm obviously wanting it to take the highs here. It might not, it could stall here. Kind of depends on what Bitcoin's going to do and if Ethereum wants to continue up. But I see no reason for this to just totally fall down from here. Okay, so. I'm looking for this quick rise up. There's not much resistance in the way, and front running the monthly. Obviously, it could get a lot bigger and a lot better, but nevertheless, I'm not going to get like greedy on it. I'll be happy to front run this monthly slightly, and take it to there. And if we obviously claim that monthly, then I'll enter again higher. I would say that I have to acknowledge that it is possible it does fall down, because I'm not saying 100% we're going up, but if it does fall down from here, and we sort of come down below this really big support resistance level, let me mark it out properly with this. So if we come down below this really big support resistance that we do have here, you can also see how that was confluence this first high, and that was where you found support. So if you get below this, okay, so if we do end coming down below this, your next area of interest is going to be around these series of highs, which is then also the CC. And if you lose that again, you're probably it doesn't seem so likely at the moment, but prepare for everything sort of thing. If you do manage to get your way all the way back down here, it's really likely that you're going to come back down. That'll probably take a little bit of time, and then you do have the next setup, which is another long position. Obviously, you don't want to hold this all the way down. It would be pointless. But you have a new setup potentially forming with the confluence of the weekly, the 6.6, and the bottom of the channel altogether. So if it came down more slowly like this, then you do have that possibility, which would be another long. But time will tell. Obviously, it could also play like this, where we get like our move up to finish here, and then ultimately come back down to here, and that would still be a really nice potential long. But then you would also have to acknowledge that you are obviously in this bit of a bearish downtrend at the time. But that's the way that I could envision this playing out, to be honest. And that's Tezos. Obviously, I believe that this is a really nice one. I know people got in on it because of the fact that I think I've been waiting for this one as well for like a month. I think it was a Contenders live stream about 3 weeks ago. 4 weeks ago. I can't remember. But I guess a takeaway point is when you see these double bottoms, okay, obviously you get the reaction from it, but price does eventually come back down. Obviously, you got the double bottom and you got an increase in price by 17%. It's a decent amount, and obviously for it to actually come down and take that double bottom, it took another 2 weeks, so 15 days before the lows were swept. So it's like one of these cases where it takes time, it takes patience, because you could have bought like here, you'd have made a little bit of money, but you probably wouldn't have hit any major take profits, and then eventually you come down and you get stopped out. So by having the patience to wait for it, okay, yeah, there. Yes, it's a nice. I think this is a nice setup. I'm content with how it's going anyway. You know, how can I not be content with 4% at the moment? So, yeah, that's Tezos. So yeah, moving on to visible range. So let me just take a drink really quickly. So yeah, the visible range is obviously one that's become like really popular, I feel, recently. So this is obviously when we come over to TradingView. Each website has this name slightly differently, okay, but it's going to be the similar sort of thing across all of the websites that you use. Obviously, I primarily use Trading Technologies, Sierra Charts, and TradingView for my charting, so to speak. And they do have slightly different names on all of this. I know the vast majority of people here use TradingView, and on TradingView they do call this the VPVR. So if you want to like add this, it's called VPVR on TradingView, visible range. Okay. So yeah, slightly different names on different websites, but yeah, that's what it is on TradingView, and that's what I'm going to be going over here today. So, firstly, you need like an introduction, I suppose, of why is the visible range useful, how is it used, and then how do I use it. So firstly, the visible range is really, really, really so amazing. Okay, so you have to think of it. Now, I think that this should help you when I give a little bit of an explanation. Okay, so you have to envision that you know, trading is generally going sideways. Okay. So I've made up this like little explanation here that you have to think of trading like selling or buying an item online, or like eBay, where something is being like auctioned up and auctioned down. You go to a car auction, for example, the price is going to start low, and you know you see how many bidders are going to be buying that car for $1,000, and then you go all the way up, sort of thing. As there's more demand, or if there's no demand at that price, then the price comes down, sort of thing. So you can envision it kind of like eBay at auction, or something similar to this. Okay. So what you can imagine, okay, to get your mindset thinking in the way that price goes up and down is imagine that a new item comes onto the market, okay? So you try and relate this to some people. A new altcoin comes onto the market, okay? First time it's hit, you know, just come out of ICO, you don't have too much data, it's first time on an exchange. And here we go on the first time. So it's going to get listed here, you know, on Binance, very cheap, okay? So it gets listed, and, you know, as soon as it gets listed, a lot of people are speculating on the price. Okay, so speculation obviously drives the cryptocurrency market in particular. It's a highly speculative market. So coin gets listed on the exchange, and it's valued very, you know, it's the perceived value is very cheap. So what you can imagine is that when the price is very low, it's going to get bought up very quickly. Okay, so there are a lot of demand at the low price, you know, because it is considered cheap, and price is not going to stay at that low long. Likewise, the asset is then going to increase in price very quickly because there's a strong demand that initially comes into the market. Suddenly, there are not many people wanting to buy at this price as it is deemed too expensive. Okay, so you get listed on the exchange, price has a massive increase in price. And then suddenly, people have gone from viewing this as a really, you know, really cheap asset to that having suddenly a massive increase in price. People are going to be thinking, wait a second, this is now massively overvalued. I am not going to buy at this level. Rather, I'll sell at this level, and I'll wait for price to come back down to the medium, where I'll then be happy to buy again. Okay, so for example, you could put a Fibonacci on the bottom to the top, and when it comes down 50% to your 0.5 fib, you could say, well, this is the medium. This is where I'm happy to now buy again. Okay, so then the asset then slightly decreases in price, okay, as people you know, as supply starts to come into the market, where people are happy to buy and sell. Okay, so it's going to decrease in price, let's say to the 0.5 Fibonacci. And this is going to be considered your fair price. Price is going to spend the majority of the time at the fair value. Okay, so I'm going to explain like how you trade this in a minute, but to like get your mind into it, you could say, you know, when price is going along, it's going to go from, you know, great areas of demand where it's going to be bought up into great area of supply where it's going to be sold into, and the majority of the time it is going to be in the middle of the range. Okay, and you know, where it's viewed as a fair price. How do you break out of these ranges is what I'll be explaining today. But yeah, price will continue at the fair price until there becomes an imbalance of buyers and sellers again, and one side becomes stronger. And I hope that makes sense. So this is how the market is working every day, and we can use volume to verify amount of interested buyers and sellers at each price. Okay, it is important to remember the market is always in two types of auction, ranging or trending. A ranging market is what happens 80% of the time. So price trading from high to low, back to the highs, back to the lows, back to the highs, back to the lows of your sort of sideways parallel channels. As you know, as a group, we love to trade parallel channels. Why? Because, you get a lot of practice trading them. It happens the majority of the time. So firstly, this is why being able to trade a range is important, and it also highlights, I think this is like really massively key, why taking profits is so important. Okay, so like a little bit slightly, well, I guess it's not really off topic, but let's just envision this really quickly, that you are generally moving sideways in a range. Okay, so you're not expecting price to just do this, are you? Most of the time price is going to do this and range for a long time before even continuing up again, let's say. But if you just buy the low and you do not take profits at the high because you expect it to continue up, how many times are you going to go into profits and see profits and then lose your profits and then see profits and then lose profits? Doesn't make sense. And this really, I think, is a really good way to just highlight why taking profits are so important, because so many of the times you will buy a coin or whatever you're buying, you will buy it, see increases in price, only for it to come back down to entry or even below, and you see these winning trades turn into losing trades. And it is because the market is going to rotate from highs to lows of a range during consolidation more often than not. So if you think something's going to break out of the range, there's a higher probability that it doesn't. So it's a more likely that it actually is going to reject at the highs and come back down again. Why do you think so many times you see swing failure patterns, on the first attempt? So obviously price will break up, come down and form a low. Why do you think it comes up, takes the highs and comes back down, and then maybe takes the lows and the highs, and you do something like this? Because obviously you get like contracting price action sort of thing, and it is just because you're auctioning. Okay, so you've just come up like a big increase in price. This is now your supply zone, as people that have bought down here, so people that maybe have accumulated at the low are now distributing at the highs, and then they will reaccumulate back at the lows. Okay, and then you get mini distribution and reaccumulation form within your actual trading range itself. So it's kind of fascinating, I suppose. Really interesting when you sort of like take a step back and really think about how the market works. And obviously a trending market is a series of ranging markets that continuously break upwards and downwards. So you'll obviously be breaking up, going into your range, breaking up again, going into a range, breaking up again, going into a range, breaking up. A series of ranging markets that are continuously breaking in the same direction are obviously how you get your uptrends. Nothing just goes up and up and up. No, straight up. Okay, it's never ever just straight up. Even if it's slight consolidation, you will go up, consolidate, up, consolidate, up, consolidate, sort of thing. And obviously, like, when do you get the reversals? This is when there's, so to speak, no more buyers left in the market. So I just need to minimize that and minimize this, because I can see myself moving on the other screen and it's really distracting. So a good example of this is, just come across to the Bitcoin chart. So what do I mean? Like when there's no more buyers left, for example, like this is a perfect example over on Bitcoin. That you obviously, if I take off this magnet, you get your impulse up, you get your consolidation range, you get your impulse up, you get an upward sloping consolidation range, you get another move to the upside. First you have to think that this was a really big increase in price, but why was the sign here that you were going to run and come back down here? If you look here, the massive increase in buy volume, this is known as like a blow off top, where price has gone up and up and up and up and up and up and up, and then suddenly you have everybody just FOMO in right at the top, and this is a sign, or that this is one of the signs that you can see the top being in. Okay, when you see a massive increase in buy volume after an already overextended move. Okay, so that's one way that you can identify tops, like after a series of ranging markets, and then like continuation, it's likely to turn around, for example, seeing a blow off top where all the volume has just come in all in one go, and that means like everybody's bought. Essentially, you could view it like this: if everybody's bought, who's going to be left to buy? Nobody. That's where then suppliers are going to come in and send you back down. Okay, so a question that I get asked a lot is, what are my settings on the volume profile? So my settings on the volume profile are this. So you can like pause the screen and make notes at the end of this stream. But yeah, these are the ones that I do use every time I'm using this on TradingView. I guess if you're using other platforms, The only things that you will want to be aware of the settings here, that the value area volume, I sometimes will switch between 68 and 70, but the default is 68. But it's not going to make a massive amount of difference. But 68 or 70 is like your average, what you'll be switching between, okay? But, I'm pretty sure 68 is the default, if I remember offhand. 68 is the default, but I will switch this to 70. But either or, it's not going to make a massive amount of difference to you. Okay, so this is then what you have within inside your ranges, okay? So some of these words will be new to you, some of you will know what this means, but obviously I need to explain this as if you don't know what it means, sort of thing. So this is what your volume profile looks like over on TradingView. So you will come onto the screen and you'll see this is obviously my custom settings, so by default it's not going to look the same, but I do recommend you copy what I have just so everything is really congruent and everybody has the same features. It makes it easier for people to read the charts. But yeah, obviously this is my volume profile on the left hand side. So what do you have within here? TradingView isn't going to like specifically tell you, but you see how this middle section here is highlighted. So this is like where the highest percentage of volume is. So 68% here, because we've got, the area of value 68%. So we can see 68% of the volume of this, what's on the screen is in this highlighted area. So this highlighted area is where you are focused on primarily when you're trading a range. And this is the range that was taken 3 days ago over on Bitcoin. This is exactly what the screen was 3 days ago when I was making this PowerPoint. What we had was our parallel channel. So hopefully you can remember this because it wasn't too long ago. So we were just trading the parallel channel, where the parallel channel low was at 6,600 and the parallel channel high was at basically around 7,000. Okay, so we had our channel high and our channel low. But how can you expand upon the channel to get even more detail, even more, higher probability trades, so to speak, like better entries? Okay, so sometimes you will notice that trades won't come down to channel lows, channel highs, and then it's generally sometimes will be held up, for example, by the area value low. So what we can see here inside of this screen, this is out of value area, this is out of value area, this is our value area, and this is the value area high, where it goes from like dark, like not highlighted, to highlighted. This is your value area high, as you can see here. VAH stands for value area high, and then at the value area low down at the lows here, this is our value area low. Inside of this, we have our POC, which is our point of control. Point of control is a really big horizontal support and resistance line, okay? As well as you can view the value area highs and value area lows as horizontal support and resistance lines, okay? But your biggest one is the point of control. And I'll explain why this works shortly. But yeah, this is, as you can see, so from this picture you can see the rotations. Obviously here we had the low of the channel hit. Okay, so if we just go back from the low of the channel, high of the channel, low of the channel, then here you reject. Where do you reject? You reject off the value area high. So you do not make it up to the highs of the channel, you reject at the value area high. Okay, so here you then actually drop down to the low of the channel, but you buy back up, and then the retrace is a shallow retrace to the value area low. Okay, so from the value area low, you obviously get this crazy spike to the upside, but nevertheless you come back down, and if you kind of class this as an anomaly, because it was literally a 1 minute spike, you then come back down, you get resistance on the value area high, can't break through value area high, you come back down and you rotate around the point of control here. So you can see there is a difference between like TPO charts and volume profile charts. They are totally different things, but generally speaking, you're going to spend the most amount of time at the point of control, because you can imagine you're going to be like in, this is where the volume is building up horizontally. So the point of control is a way of saying like the area on the chart with the horizontally the most amount of volume. So if the point of control here is 6,786, the most buy and sells in this whole picture here has happened at $6,786. Okay, so here I've just laid out, the visible range is going to calculate volume transacted at each price and total it on the side of the chart. Okay, so it's only going to calculate what's on your screen. This is where there's slightly different tools on different platforms. Obviously volume profile is different than visible range, but yeah, this is going to only calculate what's actually on your screen, and I'll go over to the chart in a second to show you how that works. But it's only literally gonna, it's kind of in the name, visible range, so it's only going to calculate what's you're looking at on the screen. Okay, so obviously here I've just wrote out VAH value area high, VAL, value area low, POC, point of control. Okay, so this is like a I'll take all your questions, by the way, at the end. All questions will come at the end, don't worry, because I'm sure there's going to probably be a lot. So this is a example, okay, of how we can trade using our value area highs, value area lows, what we can then look for when the break of the value areas come, and how we can go about trading this. So this is a range, this is a long time ago. So this was a range back from March, okay, so the start of March, where price, so this was, so this would have been just before you had obviously seen this like massive decrease in price on Bitcoin. We obviously went from $9,000 all the way down to $3,500, so a massive decrease in price, and it all started off the back of this range. Just going to take a drink. Excuse me. So obviously context is really important when you trade ranges. Okay, so context, a lot of people are just going to, as with many things, if you just take a head and shoulders pattern, for example, and you see a head and shoulders pattern on the chart form, but this is off the back of a massively strong uptrend, well, what's the likelihood of that head and shoulders going to play out? Obviously, it's really low. So you have to always think of the context when you're trading something. Okay, really, 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 really important. Context is like massively overlooked by many traders. They will just see a pattern on the chart and they'll trade they'll trade the pattern, and that's why many people are going to lose money, because the context of why you're getting this is just massively important. So here you can obviously see we were coming off the back of getting rejected at 10,500. Okay, so off the back of 10,500, we had obviously made our way down to find support around 8,500. Okay, on the way down here, we had obviously broken through several old consolidation periods to make our way down here. So we can say, at this point, price was in like a local downtrend. So when we got down to here, obviously our first low is formed here, and we come up to the high of the range, we come back to our low of the range, and this is at this point just a parallel channel. Things to note when you are going to try and start trading a range. Okay, so it's really important, a few things that you can be aware of. Okay, and some of this I will have covered in like other videos, like parallel channel videos, but one thing, standout things for me that I look for when I'm trading a range. Okay, so we can see here that the range starts. Okay, so you can see how the range starts on the really heavy sell volume. Okay, so just like I briefly explained, when you get a blow off top, we get that really big spike in bull volume, and it kind of shows everybody's bought, and then you go back down in price. Okay, so the same, if you look at like I can't pronounce the name correctly, Wyckoff accumulation distribution patterns, it all starts with like selling climaxes and buying climaxes. Okay, it's the same sort of thing with a name attached. So here we can kind of like view this as a selling climax almost, where people have sold everything. Obviously it's not capitulation or anything like that, but nevertheless it's a standout high volume. Okay, so we can say that this is like our local selling climax. Okay, and then we obviously go into a form of redistribution before coming back down, and this is like a really nice fake out, and I'll explain why in a second. But the range is gonna, you can envision a range to kind of begin when you see a heavy, a lot of volume coming into the market. If you start to see some like CVD divergences, CDV divergences, obviously I'm going to be explaining in the coming weeks, when I go over exo charts and all that, so don't worry. But another thing, you'll understand this when you watch it back in a few weeks. But if you start to see CVD divergences occurring on the drop downs on heavy volume, this is a really big heads up that it's really likely that you're going to form a range. Okay, that you'll understand in the coming weeks. But here you obviously see, firstly, just understand heavy sell volume, and it's looking likely that you're going to form the range, especially when you see the heavy sell volume and then your next move down below it is a swing failure pattern of the heavy sell range. It's kind of like you can envision like the sellers are exhausted, and people are not as interested in selling anymore. We were off the back of like a nearly $2,000 decrease in price in a few weeks. It's obviously quite a decrease in price pretty swiftly. So people are obviously hesitant at selling at these prices if they think they can get back and sell higher. So we obviously start to rotate here from rotation from low of the range to the high here, down to the low, back up to the midpoint, down to the low. Okay, here a few things that you can be aware of why you do not get any follow through. Here you obviously just get a swing failure of this low, so that's why you got no follow through to the downside here. So then you are rotating back up to the high of the range. You are then rotating back to the midpoint here. You do not get any follow through past this. Okay, so you get the midpoint and the midpoint once again. So you can see here, this is on the 1 hour chart, but this is a week, okay, from the beginning of the range here to the end. This is a week long period, okay, so a long time inside of this range. Oh my God. I don't know if you guys saw that. So yeah, basically we were in a week long range. So the all I would say, the reason why this is important is because ranges are going to be, obviously you can view like things as fractals. So whether it's a 1 minute chart or it's a daily chart, you can envision the same sort of occurring. But obviously, because a fractal is just like a price action of a smaller time frame, okay, but nevertheless, if something's on a larger time frame, like this is a week long range, you can say that the range is like stronger to be trading. More people are going to be aware of it, whereas if you do get like a 1 minute range, you can expect that 1 minute range to break within like a minute again, so sort of thing. So being a daily range, you can expect longer to actually get a proper breakout, if that makes sense. If it doesn't, ask a question. But basically, yeah, this was a week long range. So standout things for me are the initial sell volume here for where we begin the range, and then you are obviously rotating from the highs to lows, or here of the parallel channel. You can see the value area low. If we just make this really clear, so the value area low would be coming in here. So you can see the importance of the value area low on the first drop here, the second drop here, and here is the value area high coming in. This value area high, though, you have to remember is what I'm viewing on the screen. So if I was only like here in the chart, okay, so if I was only here in the chart and I did not have this data, the value area is going to be likely to be at these highs, because we wouldn't have all of this data here, okay? It's not going to be included in the visible range, because obviously this isn't visible, it's not being calculated yet. So yeah, this print screen does include this as the value area high, but you have to envision if you had not had this data yet, the value area high is likely going to be the top of the range here, okay? That makes sense as well. So here we got a few standout things, okay? So here you see a really big buy volume, okay, coming in during the middle of the sideways range. So you could view this as possibly, in hindsight, we can say it is true that there was obviously defense coming in on the middle of the range. Big buy has potentially coming in here, or with just a high spike in volume that ended green. Obviously, as we progress through the volume series, you can start to see all the volume statistics, what was within this candle, how many buys, how many sells, how many at market, how many at limit, but yeah, that's to come as well. But yeah, nevertheless, you can just like a standout thing to note is the increase in buy volume here, okay? But nevertheless, it you continue sideways for another about another day before you try and break up outside of the range, okay? So price attempts to leave the range to the upside, but notice how it was on much lower volume than the break that started this range, okay? Also smaller volume than most spikes within the range, okay? So when you are trading a range, and the volume profile is helpful for trading ranges, so you can identify sometimes easier the highs and the lows of the range that you're trading. And what we can note here, okay, is the volume is really, really important to be aware of. This breakout is on much lower volume than what we can say the big spikes that have happened in this range, okay, have been around, well, slightly below this, around this level, okay? So you can see spike, 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 and spike. These spikes are, the high of the spikes of the range, and the breakout of the range is not on any sort of high. It's not, there's 1, 2, 3, 4, 5, 6, 7, 8 candles with bigger spikes in volume. So this, although an increase above the average, in the grand scheme of things is nothing to shout home about, okay? You can say, okay, if you're just viewing it a little bit more simplistically, that this is still a decrease in volume, isn't it? So decrease, there's obviously decrease, and sort of it's like decreasing in price. So if this was a real breakout, you would have wanted to see this do something like this, at least break the average sort of spike of in volume, okay? But because it did not do that, because you moved outside of the range on a decrease in volume, it was just something to be aware of, that it's not the most bullish breakout. It doesn't mean that you have to come back down, but it's just not the most bullish breakout. And what you actually end up forming here is another range outside of your range, okay? So then you end up forming this kind of range going on here with the lows and the highs of the range coming in here, okay? So how does this range end? Again, you rotate from the highs to the lows to the highs, to the lows, to the highs, back down almost to the lows, swing failure the high, massive decrease in price. So the swing failure here is a big sign that you could be, potentially coming down. Why was this also a bit of a more of a sign that it was about to head down? I know many people in the group also traded this short with me. Obviously swing failure to highs, and you can see that when you were inside of this range, what was the only spikes in bear volume? What was the only spikes were bear volume. Okay, so it's really notable that you moved out of this range on a decrease in buy volume, and then you begin to sell off on an increase in bull volume. And if you compare how you came into this by when you were coming out of it, you see that the higher volume was the bear volume. And on the grand scheme, now this is where context comes into play. We entered this range on the high bear volume, we move out of it on low volume, and then the increase that comes again is starting to be on high bear volume. So it's clear, in my regards anyway, it's like clear that this is like a redistribution happening. Okay, this was more of your like selling climax. These are a few different springs going on within just the lows of the range. This is like your test of the highs, and then this is kind of just an extended an extended fake out of the range. Okay, the volume was really minimal. There was no reason to be thinking this was like any sort of major low. Major like low here, and we were moving up. And if you could remember really, really well indeed, and this is where other theory comes into play, this move up, this was a 1-to-1 extension from high to low to here. This was just a simple 1-to-1 extension. Okay, and what do we know about 1-to-1 extensions? They are kind of like Elliott wave theory. This was your A, this was our B, and this was our C sort of thing. And then we got our spike, swing failure pattern, head back down. So, this was our, I can remember trading this at the time, and I'm sure many of you can too, that this was our like classic 1-to-1 extension. Okay, so as we know about 1-to-1 extensions, when the context is really bearish, it's more likely to just be a bearish, correction before continuing the actual trend. So the context is really important. The volume is really important to note. The way that you are rotating outside of the range on low volume is really important to know. And then the swing failure of the high. So it's like bringing it all together. Okay, and I'm going to go over I've still got a few more slides before I go over some more examples, but yeah, this was a lovely example of what you can see why it's likely that you're going to head down, and then what you would want to see if this was likely to be a bottom. You would have definitely wanted to see the increase in bull volume, pullbacks on lighter volume, and then increases again on bull volume. Okay. The visible range tool is only going to show you horizontally where the volume came in, which price there was a lot of buying and selling. The reason this is helpful is because imagine this happened 2 days ago. The reason why this is helpful is because imagine that you have this yearly open at 7,160. Okay, if we just flip to the Bitcoin chart, obviously our yearly open is at 7,100. I thought I had it marked on my chart. I don't, but yeah, the yearly open is 7,160. Okay. Many people sold into that level. Okay, so you have a strong horizontal resistance. Many people are going to be selling as you hit that level. Okay, but when price breaks up through that level and then revisits that level from the upside, all the people that have sold at this level, as it comes back down, are going to be getting out break even. Okay, so many people, if they're sat in underwater positions, just want to get out break even. They don't care about taking the win anymore. They realize they were wrong. They're too stubborn to close for a loss, and they will just be praying essentially to get out break even. So that's kind of why you can envision high volume areas. Okay, so your point of controls, if you break a point of control where that's the highest volume, you can know that when you come back to that level, there's going to be a large amount of people that are going to sell at break even, and that's why you get these support resistance flips off of the point of control. Okay, so then how can you go on to make some even more sense of this sort of thing? So at the value area high, this is generally within the range where one would start looking for shorts, as it is considered above a sort of average fair value. Okay, at the value area low, this is generally where in the range you are going to start looking for longs, as it is considered below value. Okay, and at the point of control, this is generally within the range where one would not be taking a new position as you are at fair value. Okay, so come back to this example or this example. at the middle of this range, you're not going to be looking for longs or shorts, generally speaking, because you're in the middle of the range. It's the fair value, okay? And this is where most people, you're going to be trading the different than most people. Most people are going to be thinking when it breaks down here, they're going to start looking for shorts, and when it comes up, they're going to start looking for longs. Okay, that's generally like psychologically and emotionally how people are going to think. They buy at the highs and they sell at the lows, time and time and time again. So you have to think not like an average trader, but when we're rotating to the highs of the range, average person going to be looking for longs. You're going to be looking for shorts because it's above the value, and then you're going to be coming back down to the low value area low, e.g. a good value, trade it. Okay, and the way that you can trade this again is if you are buying here, we'll take profits at the middle. You can try and trade it to the high, but take a good percentage at the profits in the middle of the range, because that is the fair value of the range. Okay, and you can kind of see here where if you had shorted the top of the range, taking value, taking profits at the middle of the range is a good idea. Yeah, it can come down to the lows, but essentially you are always going to be taking profits in the middle of the range. There's no point just buying the lows, selling the highs, because the midpoint, as you can see here, from low, midpoint back down to the low. So the midpoint is going to act as support resistance, and you can compound, and it's just always sensible to take profits in the middle of a range. Okay. You can also see here how when you were breaking down, look how long it found support at the middle of the range before breaking down. But by taking profits here, although it did break down, obviously, you cannot ever beat yourself up by taking profits. Okay. This was that print screen again from here. So this is an updated view of how this range continued to go on, because as we all know, this was from the 5th when I was taking this one, and this is how that range traded out. So you can obviously see here, this is a bit of a clearer view without the parallel channel there. Okay, so it is this picture with the parallel channel removed. You can see here how you were rotating from value area low to value area high to value area low to value area high, and then once again it continued where we had our move to the value area low, and we had our move to the value area high, and this actually moved down again to the value area low. As you all know, it double bottomed on 6,600, so you actually had another move. I'm not sure why I didn't include this. You had another move down to the value area low here before, as we all know, it increased in price. But that's just a lovely recent example on Bitcoin of how trading between these ranges is so amazingly helpful. Okay, the value area low, good area to look for long. Value area high, good area to look for shorts. Point of control, good area to take profits when you're trading the range. Okay, so here is the updated screenshot, so you can actually see as price starts to move outside of the value area high. Okay, with closes, one would look to close shorts, and this is important to remember that if you are trading from lows to the highs to the lows to the highs to the lows to the highs, and you're expecting it to come back down to the lows, if you start coming above the value area high, so if you start coming above the value area high and closing above the value area high, you are going to be looking to close out your shorts, because if you are kind of just robotically trading this low to high, low to high, low to high, you have to 100% acknowledge it's going to break at some point. You are 100% guaranteed a loss, at some point, because you are robotically trading highs to lows. It's not going to go sideways forever. It is eventually going to break out. And so this is known as acceptance outside of the range. Okay, so if you are in a range and you start getting accepted outside of that range, that is now showing you that this value area high, okay, has become you could say that the supply, okay, so a way of viewing it would be like this, that the supply that's coming in, and always view it as a region, don't view it as an exact level, but a supply in this region, okay, we can just take it more or less like this. The supply of this region has become exhausted. Okay, so everybody that was selling here, selling here, selling here, selling here, selling here, there's no sellers left. Okay, and what can you see here is a low, a higher low, a higher low, a higher low, a higher low. That is a sign of accumulation with these higher lows going into an exhausted going into an exhausted value area high. With the higher lows is another sign that you're likely to break up, to be honest. But nevertheless, when you get acceptance above this value area high, it's really likely that you're going to push on again higher, because you are now becoming you're starting to see, people are starting to see value above what was previously known as a value high. So if people are now openly buying above an old range, well, that's clearly going to make you believe, okay, this is now going to be, we're going to go into a new trading range. Okay, so you're going to go into a new TR here, where as price is going to move up, what you're expecting, you have to remember as well the context of this. The context of this is an uptrend, so price moved up to go into this sideways range. You are generally going to expecting it to continue up again. So you have a lot of factors to be cautious on the short side when you are in a bullish trend, and obviously you were here on Bitcoin, still are. So yeah, this is obviously our rotation coming above value area high. You would look to close out your shorts. Okay, and this was a nice question. You know, this was from when I was trading this range, so this was back on Monday. We're now on Wednesday. And as you know, I was like updating you, trading, you know, how this range was going. This would have been, yeah, Monday. So I was obviously, I can't remember exactly Monday, but nevertheless, this was our kind of setting that we had going on here. And you know, just making a comment, you know, here another take profit taken within this little range that we had going on. Okay, so you can obviously sculpt, you know, people can sculpt this range with me if they want, and you know, if you start to break outside of this range, then you can expect follow through. And I got a question of, you know, what about if it explodes, you know, outside of this trading range while you're trading it? Okay, and my reply, just want to like highlight it so it's really clear. So you know, this range, we know with 100% certainty when we are scalping or just trading this range, doesn't have to be scalp trading, but when we are scalping it or trading this range, it will eventually end in a loss. Okay, we can say if we're just robotically trading it, then it's going to end in a loss at some point. And that is why risk management is obviously so important. So, you know, so far I had traded this successfully from low to high 4 times. So 4 trades, 4 wins. But I know that eventually, you know, if I'm just trading robotically, it's going to end in a loss, because at some point it's not going to rotate from the highs to the lows anymore. And we're going to break out and move to a new range. And yeah, I do use soft stop losses when I'm scalping. But yeah. It is important to, and now I'm just emphasizing this with even more, so it's important to realize that if you are going to trade a range robotically like this, that one of the trades is 100% going to end in a loss. And when the range, you know, when the range finally breaks out, so I need to take another drink. Okay. With that in mind, and why I'm saying robotically here is because you can get signs that it's going to be breaking out. Okay, so like I was like highlighting before, these little glimpses. Okay, little glimpses that you can see, you know, you can get signs that something is going to break out of a range and it's not going to continue in it. But if you're trading just robotically from highs to lows with not looking at anything at all, then you are 100% going to take a loss. Whereas if you're trading it with like more knowledge, then you can obviously get heads up when something's going to break out. There's no obviously 100% guarantees, but you know, you can get these sort of heads up. So yeah, a few ways that I've listed here that I will look for heads up when I'm trading a range. Okay, so statistics that I will look at when I am going from highs to lows. Okay, some of the bigger statistics that I will be looking at is the time. Okay, so how long is it taking from highs to lows, highs to lows, lows to highs, highs to lows, lows to highs. When I'm trading a range, I will be looking at the average time from the low to the high of the range, okay? And then from the high of the range to the low of the range, from the low of the range to the high to the highs to lows. I'll be like recording how long each rotation is take. So we can say rotation to the upside, 10 minutes. Rotation to the downside, 10 minutes. Rotation to the upside, 10 minutes. Rotation to the downside, 10 minutes. I will also then look at volume. I will look at volume and I will look at delta. 2 things that I will be covering in future live streams shortly in this volume series. But delta is a thing that I'll be really looking at. And let's say that we move up to the higher rate. So we're in 10-minute rotations. It's just a made up example, but we're in 10-minute rotations, and the rotation to the high is on 10 million plus delta. The rotation to the low is 10 million negative delta, 10 million high delta, 10 million low. So we can say that we're moving in this range with a plus, you know, from the lows to the highs. Overall, we're just saying 10 million delta, and back down to the lows, negative 10 million, and it's taking 10 minutes overall. Okay, so we have like the averages of what's happening in this range. So how can you get a heads up that you're more likely to break? If you then go for, you know, let's say on your final rotation, you're going from the lower of the range to the higher of the range in 5 minutes, and you're on plus 20 million delta, and so you're seeing like a big you're starting to see here an increase in buying pressure. Okay, you're starting to see price come up with momentum, you're starting to see it come up with an increase in delta. It's a heads up, you might want to think about trying to fade the top of this range, especially if the context is bullish. Okay, there are other tools that you can use for this, obviously, but just simply looking at those statistics are going to give you a somewhat of a heads up that you might want to think twice about trying to fade this move. Okay, what you can look for. Another thing that you can look for that I haven't mentioned here, thinking about it, that I do like to look at, is that when you are coming up to the range highs, you can see how aggressively the highs are being sold. Okay, so if you are seeing aggressive selling at the highs every time, so every time you're bouncing off, let's say 10 million negative delta, 10 million negative delta, say you come up to the high of the range and you're only seeing like negative 2 million, well, that's showing you that there's suddenly less people interested in selling. So it's another way that you can get a heads up, with really good probabilities that you're going to break out of the range. Okay, other things that you can sort of look at here is obviously the overall context and divergences and momentum using simple things like RSI sort of thing. Although I don't like it so much, but you can use more simple things as well. And then that's how you would look to trade your range and get heads up when your range is going to break. Again, now I'll come across to TradingView again. So yeah, let's go over some like examples and stuff. So let's go down on like the 15-minute here. So we can see we're in this range at the moment on Bitcoin, aren't we? Okay, so this is the range that we are in right now. Okay, we can see this is a pretty nice one. So a few things that we could like mark on our chart. So we can mark out here a value area high. We can mark here a value area low. Oops. We can mark here a value area low. And we can mark here our point of control. Okay, so we now have like 3 points on our charts. Okay, here we can see big acceptance that got below this range, but obviously it was brought back up. I personally think this is really choppy. Okay, so for me, Bitcoin is really choppy at the moment. But nevertheless, we go from value area low, slight break up to value area high, back down to the value area low, but just breaking straight through it. This was obviously last night, so if you remember correctly, this obviously came down to our yearly open. Reclaimed it and it moved back up, so this was a little bit of a fake out in the end. Okay, it really was a pretty big fake out, but nevertheless it was reclaimed. Move back up. Where do you move back up to? Okay, your value area highs, you reject there, move back down to your value area lows, move back up to your point of control, swing failure here, but you move down to your value area low again, break through it slightly. And where do you move back up to? You're moving back up to here, your point of control, and pretty nicely here, obviously, because you have to remember that when you're moving this around, it's only going to take into account what's on your screen. So you see here, the value, it's all going to change. So you have to make sure you're only looking at the range you're trading on. And you can see here, we've basically just touched our value area low again. And, if you had just bought this value area low, then you're currently in profits. So, that's how you are using this over on TradingView with the value area highs, value area lows. Because if I did not have this on and I was like looking at a channel like this, how would I draw my channel? I would probably say my channel would be along this lines actually. Okay, so I would say I would have this as my channel high and my channel low, I think I would choose as this. Just eyeballing that. And then if we see, I can't remember, does this line up with the point of the value area highs and lows? I don't think it did. So no, not really. Okay, so what I would have chosen as my area highs and my area lows, it's close, but obviously it doesn't quite line up. But then we can see that this is, this is why important. It's like view this as a region. So we can say this is our region of the lows, okay, and this is our region of the highs. Okay, and obviously the middle of this range, you're not going to be interested in trading. But yeah, that's like the value area. Okay, some other software that I would like use, I guess what I could do is show you on Sierra charts, because Sierra charts, I know some people use it, and I really like this. Oh nice, they got back to me. So it's slightly different on obviously all these websites, so I will show you what it's like on this website. I guess this is more market profile theory. I can show you really briefly, but so if we come across to, this is my like daily chart. Let me show you on yes, I will do this. So like, let's say for example, like you're in this range here, okay, so when we were back in this range that we just broke out of, okay, so you can see like this is just a slightly different way of viewing it, so it's not going to be like visible, so it's not showing us our visible range, but I can just show you, this is slightly off topic, but little tips that I will do. So when you have like 4 days range bound in a row, we're range bound, we're just going from the more of the highs to the lows. what you can do is like composite this. So if you have like 4 days sideways, you can merge this with your profile, merge this with your prior profile, and merge this with your prior profile, and then you're left with like one bigger range. So then you can see over the last 4 days the value area high, the value area low, and the point of control. This is also the TPO charts. This is a little bit more advanced. I don't think I should go over this anymore. It's a little bit off topic actually thinking about it. But yeah, that is a bit off topic. So but yeah, generally speaking, if you want to, like, you can't merge profiles obviously on TradingView, so you just have to like zoom out even more, and essentially that's kind of merging the profile, I suppose. But yeah, there's like little tips and tricks that essentially you're looking at this as your range that you're trading between, okay? And the point of control is really massively important. Again, why is it so important? Because this is the level where a lot of people have bought, and in trading, when you break from a level and you come back to that level, there's obviously going to be selling or buying interest depending on, if they were on the wrong side or right side of the market, okay? Value area highs are going to be like values where you look for shorts, value area lows at values where you look for longs. Does anybody have any questions? Any questions at all? Let me see here. I'll just load them up. How do you remember all this knowledge? Every contender stream comes out of your head. Do you have a 500 gigabyte SSD? Yeah, I don't know. It's like I've just been doing this so long now. Like AJ Crypto says, like, been doing this nearly 10 years now. Not quite 10 years, but 9 years. So I guess it's just like you've been doing this so long, and it just like, I don't know, remains in your brain. You have to remember I do it every day as well, so it's just kind of like so I can like see myself in the I hate like looking at this. It's just self-paid, but yeah, I guess it's just because I've been doing it so long. A pity VPVR can't have templates that we can save. What you can do is like double click and then make your settings. Okay, so put in the settings and then save as default. So that is what I do anyway. Put in your manual settings, double click on it, like put in your settings, and then template save as, and then this is gonna, I clicked on parallel channel. This is then going to save it as the default, and it will always come up with those settings. That's what you need to do for that. Okay, and what else do we have here? So someone answered your question. Mike answered the question. What else do we have in here? If the play is long the value area low and short the value area high, why isn't taking profits at the POC cutting short our potential profits? Because you can never know that it's going to reach the other side. Okay, yeah, of course it's kind of cutting short your potential profits, but that is not how you consistently trade. Just trust me on this. If you are only longing the value area low and only going to take profits at the value area high, obviously, yeah, you're going to get less profits, but overall you're going to make better trades. Okay, you're going to make more trades, because so many times you will see kind of like what you could see here. Let's say you long the value area low here, and then it's come up to the point of control, and now it just comes back down. And instead of taking profits and moving up your stop loss, you get stopped for a loss. So many times you're going to see this. Or alternatively, it will do this. You'll long the value area low. It will come up to the point of control, and then it will come back down to your value area low. And if you've taken profits here, you can compound back on your long, as long as you're not seeing red flags on the way back down. You can then compound the long and then come back up to here, and you can then like do something. Just trust me. You don't want to be just longing at the low and taking profits at the high, because more times than not, the range is not going to play in such a fashion where you are literally just going to go like this. Okay, it is going to have things like this occur. Okay, it's going to see this type of action where you're going to thank yourself over time if you're taking profits at the point of control. Like, it is a big support and resistance level. So yes, it's really of course you're cutting potential profits, but it's like 100% worthwhile. Okay, don't view trading like trying to get the exact all the profits possible. It is taking profits is better than taking a loss. Okay, so you'd much prefer, trust me on this one, 100%. You might find it annoying when you take profits early, but what would you prefer, to take profits early and actually make money, or would you prefer to take profits late and lose money consistently? Obviously you might find it annoying taking profits early, but you are definitely going to prefer taking your profits early than not taking profits at all. Okay, so yeah, we take profits at the point of control because it's a really big support and resistance level. So let's say you start a channel on the 1 minute time frame. The value area high changes after some time. Would you change the top of your channel to? So I don't make my channels off of value area highs and lows. So when I do my channels, as you kind of saw, I didn't see that question, but as you saw, like I will make my channel first, and then I would look at like the value area highs. So like the question here being, you know, would I change my channel off of the value area highs occurring? Then the answer is no, because my channel would be built first off of prior market structure. So like, let's use this as an example that you're on like a 1 minute chart. Okay, yeah, obviously this value area high and low is going to be changing all the time because you're getting new data and new data and new data every single minute. Okay, but you know, the channel itself is going to be the same. So the channel itself is going to be built off of like market structure, not volume. Okay, so the parallel channels are not built off of volume, they're built off of market structure. So this is then when you have like the best of both worlds when you're trading a channel, because you're trading off of channels, which is market structure, and then you can add in the volume, which is then trading off of volume. So you're trading off of market structure and then volume, if that makes sense. On the channels, where did you get the bottom support of the channels? I suppose that you're on about this one here, and this example I've took the highs here because clearly we can see, you can just kind of view it as like a supply and demand zone. Like this is clearly where there's supply coming in, so we can say this is the top of our channel. This is where we had our first bounce, okay, to swing failure to highs. So this was our first area of demand. Although we dropped down through it, we can see still there is demand at these lows. So I've kind of taken this in more of an unorthodox way, where I've taken it from you know, closes to where I'm seeing like an area of, you know, it's almost, you almost retested it here as well. Okay, you didn't quite get the retest, but you can see how this was a support resistance support flip. So it's like a big horizontal and a big horizontal level. Okay, so that's kind of how I've done my channel there. I mean, could you have your channel at the way lows here? Yeah, you kind of could, because then your middle of the channel becomes yeah, I don't like it quite. You know, it's not the end of the world if you have your channel like this either, but yeah, I wouldn't myself, but yeah. So the next question here is Daniel, about using the value area lows and value area highs of XO charts. Do you not think that should be more accurate? Yes, but the difference is, so when you come across to XO charts, I know what you're on about. When you're looking at like value area highs and value area lows, this is not the visible range. So this is just going to like give you like your daily value area high and daily value area low. So like when we go into the market settings, this is like going to be on your developing day. Okay, we can mark in our value area high and value area low, and this is going to be telling us the value area high of the day and the value area low of the day, but not visibly what we're looking at. So there's obviously advantages and disadvantages to visible range versus you know, overall data of the whole day. Another example is like when you're looking at things like your net shorts and net longs. Obviously what you can choose between is looking at full data or your visible range, and there's pros and cons of using each of these. So what you have to realize, so good question, but you have to realize that there's pros and cons of using each. And I would say, like, if you want to know the whole day's data, then yeah, 100% you're better off using it off of like XO charts, because it's going to really clearly and easily tell you. Whereas if you only want to see the visible range of the range that you're looking to trade, which is not necessarily the whole of the day's range, if that makes sense, then that's clearly when the visible range is going to be beneficial. And that's like why on XO charts you have the option of using visible versus full data, for example. But yeah, there's pros and cons of each. And I guess when I get across to the XO chart stream, I'll go over that in more detail. And I guess for now you can just know that they are different. So your visible range is not necessarily going to be the value area low and value area high of the day, because it's more dependent on what you're looking at. So yeah, there's pros and cons of both, but I wouldn't say one's better than the other. Okay, they're just different ways of, you know, getting the data. Daniel/Mike, at which point do you see a long on the daily time frame? That's irrelevant. Karim, what about the zones outside value area? Do they have any significant like volume nodes? Yes, so that's a really good question. that this is obviously so this is above our value area. Again, this is below your value area. So like, how can these be like used? So what you could say is, if you start to see, if this is your value area high, this is your value area low, if you start to see acceptance above your value area highs and above your value area lows with increases in volume, that's when you're going to start to come onto your new range. So if we like broke up, for example, here above the value area high, and that come on high volume, you would generally expect this to have continuation to the upside. I think that's what your question is. So what about the value? Do you have significant like volume nodes? Okay, so this is another good question. So obviously within here you have your high volume nodes. So this is known as a high volume node. Okay, this is going to be known as a high volume node somewhat. It's not that high, to be honest, but like, it's a high volume node outside of the value area. Okay, just like this is a little bit of a spike of a high volume node. I need, this is kind of a little bit different theory, but I see what you're on about. But yeah, I think this is your question anyway. So yeah, these high volume nodes, although this is not really that high volume, but nevertheless, these high volume nodes can also be support and resistance zones. And then obviously these low volume nodes, so this is then a low volume node, and this is where you expect price to go through quite quickly. And as you can see, like, price goes through it quite quickly because there's no volume that's built up at that level. People aren't interested in buying and selling at it. I think that's what you mean, Karim. If that's not, then please ask that question again. So yeah, they do hold significance, but they're not massively important, if that makes sense. Yeah, they're important, but I would start looking for other factors. I will go over the Elliott wave count briefly at the end. In a ranging market, you say the volume that brought about the range, is it compulsory that when breaks happen we need to see the volume high then the volume that started the range, or do we look at current volume? So it's not compulsory, because many times you will see price breaking up outside of ranges on decreases in volume. And what's that signaling to you? It's signaling to you that the trend is weakening. Okay, so this is actually happening now on Bitcoin. You can see we're breaking up here locally and the volume has decreased. So it's not like compulsory. It doesn't mean that we've broken up here on lower volume that we have to break down, but it is starting to become a little bit bearish. Hence why this is like a count which may have one more push to the upside before we fall down, sort of thing. But yeah, it's just like healthy versus unhealthy. If this break up here had been on another really big increase in volume, you wouldn't be starting to be cautious at this area. But because we broke up on decreasing volume, you know, it's sensible to be cautious, because it's just like not known as like a healthy uptrend. Okay, you want to see volume support price, and when it doesn't support, it's a little bit more bearish. Okay, so you can see though at the moment how well this like EMA 55 support, break up again, support. So while we maintain like these supports, it's not the end of the world, but you know, so it's not like compulsory. It's not like you can move up on low volume, because obviously you can, but it's like an area to be cautious. If you start moving up on decreasing volume, that is bearish, so you want to just take caution when that starts happening. But it's not like a has to happen sort of thing. You can move up again, but it's definitely an area to be cautious. You mentioned that before ranges you expect buying / selling climaxes. Any tips beside volume how to spot that ranges is likely to form after climax? Really good question. So if you are looking for so the question is, any tips on how to spot the ranges likely to form after that climax? So let's go back to where we had a climax and then a range. So let's go up on a higher time frame. So this is like our best example, I suppose. So after we formed this high, what made us think that this was likely going to range? Obviously it kind of in the end went into this like, you know, downwards kind of channel, a little bit of a, but what could we look for? What can we expect? Why is this likely to range? So obviously we get our selling climax here. So at this point we can say we're not expecting price to go back above here. So we can say that this is definitely not expected to be broken. Okay, so if that's not expected to be broken, where's a really important low? The first low that was obviously made after that big sell-off. Okay, so then you have your I think what I can do here is if I zoom in here and try and just encapsulate what we had. Okay, if we just look at it like this. Okay, so it's a little bit cut off, but you can see what you would have had here is your value area low, and we can just, well, you can remember that value area low and your value area highs, okay, of this. So then within here, you had your initial high, you had your initial low. So the question, I think that, so any tips beside volume to how you can, so why would have you expected this to range? So you obviously had your selling climax, okay? Upon that selling climax, you got a big decrease in price. So if this is the start of your distribution, okay, so think of like how distribution works. What are you looking for? You're looking for your selling climax, okay? After your buying climax, okay? So you have your buying climax, where you can view everybody's bought. What happens after the buying climax? You have like an automatic rally on like a lower volume, and you can see here you decrease in price on low volume. Okay, so the volume is decreasing, and then what happens here? You see, sorry if it's like a lot not very clear, but you can see here that the volume that is spiking is all higher sell volume. Okay, so then obviously you get another like or like a kind of an automatic rally here. Okay, and it's again on like a decrease in volume. So move down, spike in bear volume, move up in price, okay, on declining volume, and then here is again a spike in bear volume to like signal the top, where you would have been expecting this to be a top anyway, because of the fact this is kind of your invalidation. If you're on a buying climax, you don't think it's going to go you don't think you're going to go through it, because otherwise you're expecting trend continuation. So you are expecting this to be range bound, and then so this is where you could be looking for like shorts at this, here clearly you come up to around the 786, and overall you are making this descending triangle, lower highs. Here again, you come back down on pretty heavy volume at the lows. Okay, so each time you're hitting the highs and lows of the range, they're characterized by big spikes in volume. Okay, so then you rotate to the point of control, come up to not quite to the value area highs, come back down to the lows once again, you rotate back up to the highs, you put in a lower high, you come outside of the value area here. You can see that you come outside of the value area, but firstly the spike is not massive, okay, and then within the range you're seeing big spikes in bear volume, and you're still just making lower highs after what is the back of the buying climax. And obviously you rotate back down to the value area lows, spend some time around the point of controls, back down to the value area lows, come back up, swing failure pattern these highs, and then you break down, okay, after the back of that descending triangle. Obviously in hindsight this looks so much easier than what it is when you're actually trading it, but yeah, like ways that you can envision it to range, it's just because if you just had the buying climax and you aren't expecting any more buyers to come in, I think like ways that you can like tips of why you can expect it to range is start using like Fibonacci work and just like trading off of your fibs. Here you obviously get a descending triangle, so you can start to incorporate patterns, yeah, I guess I need to, yeah, I hope that question has been answered sufficiently well for you. Yeah, I guess like that is kind of the main reason, the volume. But yeah, on top of that, like Fibonacci work, I suppose, yeah. You said you use stop loss when scalping a channel, but where do you place your stop loss? So I don't use hard stops, I do use soft stop losses. So my invalidations are more like off of intuition, more off of when the chart, so if I'm trading from value area, say I'm trading a channel and I start to see closes outside of my channel, well, that's when I'll close my short. Okay, so if I'm trying to short the high of my channel but I get a close outside of the channel, that's my invalidation, I'll close my short. So I will look for like closes above. The reason why I don't have a hard stop loss is because many times you'll spike through it with a wick and come back down, and obviously that's more of the liquidity run. I don't, because I trade liquidity runs a lot, I am not going to position myself where I can get caught on a liquidity run. So I use soft stop losses for that reason. But if you're using hard stops, then you have to place your stop loss 2 higher lows back. Okay. The VPVR takes into account the candles shown in the chart, so we zoom out, it changes. How do you know where to start the range? Okay, so you could like view this. I am going to do a live stream on fixed ranges, by the way, where I can go into this more detail. But like if you're looking at this as the range, imagine you don't have this spike and you're just looking at this as the range. Well, clearly you'd have to zoom your screen in and see it like this. Okay, so you can see the range has started here because big sell climax. Okay, and so you could say, well, this is where the start of the range is. Okay, so I'm going to position this to the start of the screen, and then obviously what you still have is just trading the range. So that's how you know where to start the range, I guess, where the range is occurring. I am going to do a whole session though on the fixed range and the session volume. So yeah, I will be able to, because there's a lot of ways that you can determine how you start your ranges, and that's why I'm going to dedicate a stream to it basically. Daniel, you also use the trading view session volume indicator. Yes, I am. Yeah, so I do use that, and I'm going to do a separate live stream on that because it has like different theory again. Like the way that you use session volume is totally different than the way that you use the visible range in terms of the theory behind it and when you make trades off of it. So it requires its own stream. But yeah, I do use that as well. About channels, I've noticed that uptrending channels at low time frame, when we get a wick surpassing the top, joining the last high with the new high, this new one high, anticipate better move. What do you think? Not sure I fully understand the question. I've noticed that uptrending channels on low time frames, when we get a wick passing the top, joining the last high with the new one, anticipates better the next move. 100% sure I understand that question. If you get a wick, not 100% sure I actually fully understand that question. I guess yeah, I'm not 100% sure how to answer it. It might be easier if you send a chart and then like visually, if I can visually understand what you mean. I don't know, the wording is I'm not 100% sure but what you mean. But if you just like, obviously I'll be around in Discord, so if you just record a chart and then post your question over in here, I will get back to you 100%. So just take a print screen and post it in here, and I'll get back to that question because I think it will help visually to understand what you're on about. Cool, no worries at all, mate. And yeah, so I think that's all the questions. Oh no, there's one more question. So when you scalp on the 3-5 minute time frame, do you look at high time frame volume? Well, I would be looking at the average of the day. So again, I'm going to cover this when I cover delta. But what I like to do, if I'm like trading if I'm trading a daily, so if I'm trading on like the 5-minute chart, I will look at the volume, or the average volume of that day. Okay, the average volume of that day and the average delta of that day is what I will check before I scalp. So if I'm like scalping on the 3-minute chart, then I would look at the daily, what's the average volume of every hour of the day that we're currently in, or within the range. So if you've been in the range for 3 days, then I'll go back over the last 3 days and look what the average volume is of each hourly candle within that range, sort of thing. So I guess in that regards, to answer the question, do I look at high time frame volume? I'm obviously looking at both. So I'd be looking at the higher time frame of what's going on inside that range, and then I'd also be looking at, like on the 3-minute chart, what's happening at the volume on that 3-minute chart. So I'd be aware of what's happening on the higher term time frame while trading the lower term time frame. So I'll be trading on the lower term time frame and looking at that by having, I have the statistics of what's happening on the bigger picture before I start trading the smaller picture. Just as like when you go to trade something, you always start with a higher term time frame bias, and you get your higher term time frame way that you're trading, and then you trade that within the smaller term time frame. Yes, I'll end really quickly with this Elliott wave count. This is more like I'm not trading off of this at the moment, so it's just a little bit of just an idea at the moment, and that's it. I'm not trading off of this, but the idea is basically that we had been putting in some form of ABC and D, so a leading diagonal basically, where we're looking at this as 5 waves up for an A, come down for a B, up again for the C. Okay, why do I think this? Obviously, as mentioned earlier, the volume divergences that we have, it is bearishly diverging here, but one more blow off top would be nice to get everybody really bullish before another drop. Also, the structure of this is really clearly a 3 3 3 WXY, and then looks like we could put in another 3 here. This B could be a 1 2 3 1 2 3 1 2 3 4 5. Okay, so we could get some form of another move down here for a flat before we get this next push. But yeah, I also like as well on top of this how well we appreciated each 1-to-1. So you can see here, this is a 1-to-1 extension. Straight away you're looking at a corrective. And then obviously from this was our first 3, and then you go in here for your next 3 up. Okay, you can see again this one not quite as much, but nevertheless are 1-to-1 basically. And then what I'd be looking for here is one more 1-to-1, and you can see how this really nicely lines up with around this 8k region daily level, between 7,800, 8,200. So yeah, this is the elliott wave count that I'm aware of at the moment. Okay, but you know, I also want to see this this point of control of the local structure taken out before I can think, you know, before I can even contemplate this going up higher. We have to take out this point of control, which is 7,000. Well, actually this is slightly I'm looking at this, the point of control that I'm looking at. Okay, so yeah, it's not going to show here. The one I'm looking at is 7,370. Okay, so I want to see 7,370. Obviously we have our weekly. Okay, so our weekly point of control 7,350. 7,350 is also our weekly level. Okay, so we also have that on the weekly is 7,350, which is here. So what we can say is 7,350 is like a really massive resistance. It has been for a while now, and you can see that it's clearly, you know, rejecting. So rejection, another one. So until we can claim this, I don't, you know, I'm not going to trade this for the long at the moment. But you know, if we actually flip this and we get back above it and start holding it, then yeah, I think we can look to well, first trade up back up to the highs again. Okay, and then if it continues, 7,600. Next viewpoint. So yeah, this point of control is a really big local resistance that you need to, you know, you need to get back above that. You need to claim and get back above this, you know, before you can, you know, start thinking about this bigger Elliott wave count. Okay. And by the way, when we moved down about 10 minutes ago to that value area low that we were looking at, look at the reaction. Okay, so that's why you take profits and like trade off these value area lows. Okay. As you can see, when I can't remember how we had it exactly, but we're obviously moving down towards that value area low, you get the reaction. So this is like why you take profits. If you were long in value area lows, like you take profits, the point of control, come back down. But yeah, that weekly point of control is 7,360, and I have a weekly chart here as well. That's coming in, yeah, 7,300 on the TPO. But yeah, I mean, until that kind of resistance gets claimed, I would be slightly careful. Okay, so you can see previous day value. Yeah, so that's what I was looking at, 7,360. So when we move this in, okay, yeah, I'm really looking at that value area high over the last 2 days is 7,400. The value area low over the last 2 days is 7,247, and the point of control 7,312. Okay, and it's yeah, about 7,312. So yeah, those are the levels that I am really looking at here to yeah, want to see breaks above or below. So that's kind of what I'm waiting for. Yeah, it's not too difficult, really. Not too difficult. But really, 7,350 is the really important level. Okay, then that value area high, 7,400. So that's where you want to see acceptance above, because you're struggling to get above that. Yeah, so there you go. I hope this live stream has been very helpful for you all. Any other questions, then yeah, just come across to Discord, let me know, and I'll get back to you. Thank you ever so much. I know people are really looking forward to, you know, there's obviously so much to cover within volume. And I do need to split it up as a mentor, like into sections. I can't just cover everything in 1 week, because that's not how one learns efficiently. So yeah, obviously there's a lot to cover in this volume. And yeah, well, next week we'll have some more. So I will catch you all next week. And obviously, if you're a champion, I'll see you on Sunday for the champions live stream. And until that, yeah, I'll see you in the group every day, because I'm in there daily all day. So yeah, I'll be trading, and I'll answer any more questions if you have them over in that. So yeah, cheers everybody, thank you, and have a brilliant night. Thanks, bye.